I am Cassie Benedict. I'm Director of Outreach for Kentucky Higher Education Assistance Authority. I have been at KIA, I'm into my 16th year, which is crazy because I heard they don't let people start working when they're 10, but I guess they do. And so I have been on a lot of different sides of the table. Thank you, Stephanie. I worked in college admissions for a long time. That's where I started, and KIA stole me from college admissions. And it was funny because I remember working for the University of Kentucky, and my territory to travel was Owensboro, which is where I'm from. And I was standing in my mom's house, which is where I was staying, rather than staying in a hotel, because they do your laundry for free at mom's place. And I said to her, I'm so struck by the number of kids who, when I say, where are you going to go to college, they say, I'm not going to college. And I said, I feel like what I really need to be doing is some job that just tells kids to go to college, but I don't think it exists. And then about 6 months later, I got a phone call from KIA, and they said, we want you to come work for us and tell kids to go to college, and that's all you're going to do is tell kids to go to college. And it was great. And so I've been here, and I'm never leaving. Like, it is a cult. You can join, but you can never leave. So you'll see me in about 20 more years standing right up here, probably slightly more gray hair than I have now. Where I am with this presentation, because several people said, like, oh, that's intriguing, like, is loan a four-letter word? But where the heart of this came about when I started thinking about what we tell students about student loans, and more importantly, what we don't tell students about student loans. So just as a frame of reference, raise your hand and tell me, don't cheat and read my slides, but raise your hand and tell me, like, what messages do students and families hear about loans? Don't do it. You'll have them for your whole life. You'll never get out of there. You know what I used to tell kids? I would stand up in front of, this is when I worked at KIA, I would stand up in front of a group of kids and I'd say there are two ways to get out of student loan debt. Pay them off or die. And that used to be true, y'all, but whoa, Cassie. We tell the students, don't take out student loans. Loans are bad. It's going to ruin your life. It's going to ruin your financial future. If you can't graduate debt-free, then just don't go to school at all. How many of you guys have heard this or said this? I told a bad story about myself, so get your hands up. Okay. Yes. So what happens when we don't talk to students about student loans? When we say don't take out loans, period. End of discussion. One thing it doesn't do is eliminate students taking out student loans. It does not stop students from taking out loans. And we see this by 60% of undergraduate students take out student loans at some point in their educational career. So less than half the time they're actually listening to us when we say don't take out student loans. Nearly 50% of our independent students accept student loans, which are arguably some of the most at-risk populations. These students who are being raised by grandma or they're homeless, they're taking out student loans half the time. The average undergraduate student borrower borrows around $25,000 in their educational career. About 80% of students borrow graduate loans. So if you're looking at a graduate student, more of them than not have student loans. And students in the U.S. currently carry about $1.83 trillion in student loan debts. $150 billion of that are coming from private lenders, okay? So we look at this, and it's clear. I have been saying it to students for 15 years, and these are the current stats. So we know it's not working. We know telling a student just don't take out loans isn't working. Because when the reality sets in, and you've met with them in October, and you've said, we're going to file your FAFSA because we're going to get college paid for, and we're not going to take out loans. They're like, okay. And then when April comes around, and they owe a deposit, and they see their tuition bill, and they got a whopping $1,000 from their college, and they got a whopping $2,000 from Keys Money, but their college costs $20,000, what happens? They turn to loans because they have to. But you know who they don't want to talk to? That girl that told them don't take out student loans. So what happens is the federal aid, the state aid isn't enough most of the time, even for the highest need student. If you take a student who has the highest amount of need and you do a case study with them at a public university in the state of Kentucky, often the maximum amount of federal and state aid doesn't cover their costs. They have to supplement with loans if they want to go to that school. The scholarships are competitive and often small. I can't tell you how many times I was in a school talking to seniors, and I said, here's a scholarship, apply to that one. And they said, oh, that's $500. That's $1,000. Like, they don't think it's worth their time for that. And truthfully, $500 ain't going to do anything. $1,000 at a public university, especially if you're living on campus, isn't going to do anything. Might save you some interest dollars on a student loan, but that's it. And so the scholarships often aren't enough. We say turn to scholarships, turn to scholarships. But y'all know as well as I do, the people getting full ride scholarships are few and far between, especially now when those discount dollars mean a lot more and the state keeps cutting university budgets. So those discount dollars are going away and away and away. And tuition increases. Even if they have enough this year with all their little piecemeal scholarships, next year when they see a 9% increase in tuition, they don't have enough. And they can't quit after freshman year simply because, oh, it went up. They've got to take out loans to hit the difference. Coming down the pike in about, 3-4 months, we have federal student loan limits. Suddenly now, your parents aren't going to be able to take out loans to help you pay for college. Because I don't know if you've read about these loan limits, but parents can take out $25,000 a year and $65,000 over the life of their Parent Plus loan. That math don't math, y'all. That's only a year and a half of college for their kid. So we're getting to a point where your parents aren't going to be able to borrow in an easy fashion to send you to college. And then, of course, the family financial constraints. I was working with a kid just the other day who, he's committed to this school, he's moving in, he's ready to go, doesn't have enough money, he's maxed out his federal loans. Okay, let's look at a private loan. Okay, I don't have a cosigner. My parents are out of the picture, don't have a cosigner. So now what? So we get to this point where students just feel like they have nowhere to turn. So they turn to private lenders. And I'm not here to tell you private lenders are bad because Kia is a private lender. I'm here to tell you there are predatory private lenders. I'm here to tell you the for-profit sector makes a heck of a lot more money off of our students than I like to talk about. Families are choosing high interest or restrictive loans because they don't know which loans to choose. They were told not to take them. So when it's 11 o'clock at night and they're sitting in front of their computer and they see that kid's tuition bill, they just Google student loan, and that's where they go. And people like us who are not for profit don't have money to be the top of your Google search. Sally Mae does. Students delay or abandon their college plans. They say, I was told not to take out loans. This feels like a lot. I don't understand it. There's nobody to explain it to me. TJ Maxx is hiring, and that's where they go. Students overborrow due to lack of understanding. This situation, the overborrowing, is the situation, I went to school years ago, but that's the situation my generation got into, is that we also didn't get proper education about it, but it came with the opposite effect as don't take out loans. We got the talk that was like, it's fine, honey, just sign it. You don't have to worry about it till you graduate. It's okay, just sign it. We all have loans. Everybody's got loans. It's fine. It's fine. You could be a teacher and pay it off. Okay. But that's what I was in. That was the situation I was in the we're not going to talk about it, we're just going to get your signature and move on. I distinctly remember going to my financial aid office as a junior in college, or senior in college. I had moved out to my own apartment, and I had a roommate, and everything was good. She was my brother's girlfriend, and then they broke up. And she moved back to California, and I was stuck in an apartment that I had signed the lease on and couldn't pay for it, and I was going to be homeless. So I went to financial aid, and he said, I'll get you taken care of today. Put your signature right here. Suddenly, I had enough money to pay for my rent for the next 9 months. Still paying on that one. Still paying that apartment off. So what happens is all of this culminates into financial vulnerability. We are putting our students in a very vulnerable spot when we avoid the conversation because we're still traumatized from our student loans. We're traumatized from ours. We tell them not to take it, and then we put them in a financially vulnerable spot. So I did say at the beginning, I'm not here to tell you that private loans are bad because I don't want to lose my job. But I am here to tell you that not all loans or lenders are created equal. It's just not the way it works. So there are two different types of student loan lenders. First, you have the for-profit private lenders. And so these are the ones that you see commercials about, and you hear about it, and you see the ads on Facebook, and they're bright and they're shiny because they have money to do that. They are profit-driven. They have a profit-driven business model. They have the credit-based approval, and it requires a cosigner most of the time. They have variable or high interest rates because they can jack their interest rates up because students don't know what else to do. They don't even know to look for an interest rate to see what it is. There is limited repayment flexibility. They have fewer borrower protections, if any. They are often marketing direct to consumers. So these are not the lenders that go talk to the financial aid office at U of L and say, hey, we have a product for your students. We think we can help your students. These are the ones that are just finding your students on Facebook. They're finding your students on TikTok because they have a TikTok channel. And it limits, let me just read this bullet point. Little to no built-in counseling or education. Little to no counseling or education. So again, they just want the dollar signs. They just want another number. They just want to underwrite another loan. So no education, no counseling connected to borrowing. Then you have the state-based nonprofit lenders. So complete transparency, I do work for a state-based nonprofit lender. Don't mishear me. I do not sell student loans. My number one goal is to keep the students away from taking out loans. And if you're a four-year public or private in the room, I'm very sorry. But I say all the time, if I could send every kid to a community college for 2 years, I'd do it. If I could send every single one of them to community college for 2 years. I have 4 children. They're all going to community college. They don't have a choice. But we have mission-driven products. Student success and affordability are our missions. So we're not trying to get rich off of the loans that we give to students, off of the loans that we sell to families. We do turn that money back around and pay for things like the outreach department at Kia. So our student loan product pays for my team to go out into the world and file FAFSAs, to go out into the world and do parent nights so that they can say, you can pay off a student loan in 2 ways. They often complement federal aid, not replace it. We don't want students who have not filed the FAFSA. That's the first thing we ask. That's the first thing our loan department asks when a parent reaches out to apply for a loan. Has your student completed the FAFSA? We are more transparent with our terms, and we have a borrower-focused design. Again, when you're not trying to make a lot of money, you can have fixed rates. You can have different perks for your repayment plans. There's education and counseling built into the process. The emphasis is on responsible, informed borrowing. We're not just like, get quick, sign this, sign this, sign this. We want them informed. We want them to know what they're getting into. And we are accountable to public mission and stakeholders. We have a board of directors who tell us what we can and can't do. And they're teachers. They're counselors. They don't want us lending to students in a predatory way. So the issue that we're dealing with here is not that students borrow. It's that too many of them are borrowing in a landscape that was not designed to protect them. They are out there doing it on their own because they don't have anyone telling them how to do it. Because all we've told them is don't do that. So how do we reframe the narrative? How do we talk to our students in a way that doesn't make them too scared to come back to us and say, this is the reality. I've got to take out a student loan. Where do I go? So the old narrative was that loans equal failure. Oh, you're taking out a student loan. You must have not been smart enough to get all those scholarships that we talked about. Oh, you didn't try very hard to get those scholarships, did you? Now here you are with your loans. Okay. It was that borrowing was irresponsible and a failure. What we want to do is make it a student-centered narrative and tell them loans are one of many tools you can use to finance your education. It's one piece of the puzzle. It's not the whole puzzle. It's not the whole picture. But it is a piece that we can use if we're missing a piece. And borrowing can be intentional and strategic. We don't have to panic borrow. I always go back to the story of a mom calling me in tears. She was moving, it was August something, and she was moving her student in to Western Kentucky University. And she said, I don't think I understood, because they gave us a financial aid package, and in the financial aid package there was a lot of money in it. And I thought we were okay. And now I'm standing here in the financial aid office and they tell me I owe $10,000 or he can't move in. And she's like, I don't know what to do. I don't know what to do. That is panic borrowing. What did we do? We got her a loan. Thankfully, she called me and not someone else. But this panic borrowing is what gets us into really dangerous situations. And I tell people, and I used to tell that story in parent nights, and I used to say, don't be the person who's calling me on move-in day. Like, let's figure out your whole package long before your kid ever moves in. So the goal that we have is healthy borrowing, okay? It's not this panic borrowing. It's not the late night clicking on the first hit that comes up when you Google student loans. We want healthy borrowing. So the first and foremost is borrowing only what is needed. And one of the first questions I would ask parents when we would talk about taking out student loans, I would say, is there anything you can pay in a payment plan on a monthly basis before we put in this dollar amount of what we need to borrow? Is there anything you can pay? $50? Can you pay $50 a month for the next 10 months? Because if you can, that's $500 less we have to borrow. We want to get it down as low as possible. Like, yes, I know your kid wants her own private bathroom and a Tempur-Pedic mattress and granite countertops. I know she wants all that. Do you want to be paying for that when you're 43? I still am. Prioritizing the federal loan options. Historically, federal loan rates are lower than any private lender. Now, I say historically because Kia's current Advantage loan that we offer, our interest rate is lower than the Parent Plus loan by quite a bit. Now, is it lower than what we can offer the students on the federal side with the sub and unsubsidized loans? No. So we want to take that first. I would always tell my students that. First stop, for if you got your scholarships, you got your grants, you got your keys, you got all the things. Now we have to fill the gap. Federal loans come first because those are also designed to protect the student. Then we want to start looking at what has the lowest interest rates. Understanding repayment expectations. This is the biggest one because nobody talks to these kids about it. And so I have kids who will call me 6 months after they graduate, and they're like, I don't understand. Like, it's telling me I have to pay $400, and it's due on the 15th, and it's the 13th, and I work at Starbucks. And I don't know what to do. They don't understand what repayment looks like. They don't understand what their bill might be, because at the time, they're seeing it year by year. Oh, I only have to take out $5,000 this year. That's not bad. But after 6 years, when they're graduating, that $5,000 is a lot more than $5,000. So help them understand those repayment expectations. When does it happen? What is it going to, there are loan calculators in the world. Sit down and work with them with a loan calculator. Then the other thing that is my soapbox that I beat on all the time is connecting borrowing to career outcomes. And the students really hate it when I do this example because I pick on my art majors. And like my brother was a theater major. I doubled in theater and something else. So like I was kind of an art major, so I get to hate on them a little bit. Don't take out $75,000 to go to some out-of-state, private, top-of-the-line art school. How many artists do you know making really, really good money? The ones we see on TV, the ones we see on TikTok. So I always try to connect. If I have a student who comes to me and they say, I want to go into pharmaceuticals, I want to be a pharmacist someday, and I want to take out some student loans. All right, let's do that. let's get the paperwork going. They're going to be able to pay it back. But if they come to me and they say, I want to go into social work, and I really, really, really want to go to this private out-of-state school, and the tuition is $65,000 a year, we have a little bit of a come-to-Jesus conversation where I say, social work is really, really, really good work. It's admirable work. Have you been to the local community college? Let's start there. Because they don't understand. They just see the name, and their friends are going. But if your friend is going for pre-med and you're going for social work, don't go to Belmont. Don't do that. Okay, so why do federal loans matter? Federal loans are designed with protection in mind. So this is what I said, why we always do federal options first, always fixed interest rates. Income-driven repayment options. So when you graduate and you are working at Starbucks, maybe you don't have to pay the $400 a month. Maybe you can go on a lower payment plan while you're still looking for that dream job, that art gallery that's going to pay you $80,000 a year. There are deferment and forbearance options and protections. So you can do things like that in the short term. That's another conversation we need to continue having. Our students should not enter repayment and then have no one to talk to about it. What did I read the other day? Something about several billions of dollars in student loan default happening right this minute. The number of people who aren't paying their loans because when they got into repayment, they couldn't pay it back, and they didn't have anyone saying, just call your loan company. It's okay. Like, there are protections for you. They will work with you. When we worked at the Kentucky State Fair at the Kia booth, the number of people who were like, ooh, like, I don't want to see you because I owe student loans. I'm like, no, please come see me. Please talk to me. If you owe and you're not paying, please talk to me. I will make the phone call with you. Because it is scary. Yes, when you owe something and you're not paying it, yes, that is scary. But you know what's scarier? When they start to garnish your wages, because they can do that. When you're waiting on that big tax return and it never comes because they absorbed your tax returns, because they can do that too. That's scarier. So call your loan companies. We don't need to leave these kids in the cold even after they begin repayment. And then, of course, they have services like public service student loan forgiveness opportunities. Huge, huge. And if you know someone who's in the public service industry and you think they may have loans, tell them to call their Kia outreach counselor. We want to help you get into PSLF. That's one of the first things I ask staff when they get hired at Kia. I'm like, have you been set up under PSLF? We're public service. Let's get your loans forgiven if you have them. And we help each other. That's not something we typically offer, but we help each other. So we want to help the students too. We want to help students adults who are in the public service industry, and they might have student loans. Did you want to take a picture of that slide? Let me put it back for you. But then there are the loan limits. So the number of times when I was in the field and I would hear parents say, you know what, I paid for a private, high school, so my kids are on their own when they go to college. I'm not helping. And they would think, well, they can just take out a loan to cover their college education. And the number of times I saw the look of shock cross a mom's face when I said, he's 18 years old, he's a dependent student, they're only ever going to give him $5,500 a year. Then it goes up a little bit each year to go to college. Like, he cannot fund U of L by himself. He cannot fund UK by himself. He can't do that. They don't even understand. Like, they just think, oh, there's unlimited student loans that my kid can take out and they can pay for their own college and they can pay it back later, and I'm not on the hook for that. Students can't do that. So that's where it comes in dependency status. If it is a dependent student, we do put lower caps on them because the federal government believes that we want that, parents are going to pay for their kids to go to college. There are undergraduate caps as well as graduate caps. And there are new loan limits introduced that may not inhibit college completion. Well, there's a word in there that shouldn't be in there. Who edited this slide? I got a little overzealous on that one. There are new loan limits that may inhibit college completion for many families. This was a test to see if you were paying attention. You passed, Jenny. College complete. So these loan limits, this is what I was mentioning earlier, is there is now starting July of 2026 going to be a Parent Plus limit, which, let me just tell y'all, this is your insider tip for today. When I started working at Kia, we had the people from, I had worked there, and then we introduced Advantage Loans. But we had the people from the Advantage Loan Department, which is Kia's loan, come talk to our group in outreach. And they made us say, they were like, raise your right hand. And then they said, your other right, Cassie. And they said, I promise I will never borrow a Parent Plus loan. Like, that's how serious they were about Parent Plus loans, and they get kind of ugly. Parent Plus loans do. So, but the loan limits are now going to cap at $25,000 per year. It used to be if you exhibited any credit history whatsoever, even if it was mostly bad credit history, they would still give you a Parent Plus loan. And like however much you want. You can borrow up to cost of attendance. Now it is $25,000 per student per year with a lifetime cap of $65,000. So again, y'all, someone didn't do the math. That doesn't make any sense. But what you need to know is there are huge limitations to what a parent can now borrow for their student. And so, that's something that we have to keep in our minds as we counsel students and parents moving forward is we can't just say it's fine, they can get a Parent Plus loan anymore. We can't do that anymore. Where the state support fits in. So the state-supported loan programs can play a responsible role when there are the gaps. There are consumer protections. It is an education-focused mission. We want students to understand what they're doing before they borrow. There is counseling and support. And often there are better interest rates and terms and conditions. So again, we have a lower interest rate than the Parent Plus loan. We have better terms and conditions. And so it's just, we're never going to be able to absorb your tax return. Parent Plus loans, federal loans, they can do that. So you want to look at it as a hierarchy for financing your college education. So like I was saying, when I would go over this with students, we would always prioritize those grants and scholarships. And work study and savings always fell into that conversation. What are you doing as the student to fund your education? Because you've all worked with those kids who are like, my mom's going to pay for it. If you're my 7-year-old, you think as long as you have that little purple card mommy carries around, you have all the money in the world, and they are wrong about that. I work for the state. So work study and savings always goes into my conversations. Then the federal student loans, and then the responsible supplemental options. That's when you talk about, and y'all, and I'm not going to lie to you, before I started talking Advantage loans, if I was looking at a student and I was saying, okay, if you want to go to X university, and you've got your grants and you've got your scholarships and you're going to work and get $3,000 a year for that, we're taking out our student loans, and you're still going to owe $6,000. My first question was, how badly do you want to go to this college? So badly that you're willing to take out, at that point you're looking at $11,000 for the first year. Like, let's think about that. And sometimes the answer was yes. They wanted to go that badly. And that's when I helped them get an Advantage loan. But I always first tried to talk them into there is a cheaper route here. There is a different way to go. And maybe you wait until you're a junior to take out these extra loans. And you start out somewhere else. You could save yourself $12,000 right out of the gate by not going to this dream school. And I know that's hard, y'all. I come from admissions, and I worked in admissions at private colleges. I get it. But this is their future. And those of you who resonated when I said, I'm still paying for my Tempur-Pedic mattress, and that's false. I'm so old. We slept on the mattresses. They were plastic. I don't even think they had a shred of fabric in them. So, but you all know the students who are still paying for those Tempur-Pedic mattresses. So, the conversation shifts for counselors. So if you're a counselor, if you're a financial aid counselor, you're an admissions counselor, you're a high school counselor, you're a Gear Up counselor, instead of asking, I'm talking directly to you, can we avoid student loans? We want to ask things like, what does your full financial plan look like? What types of ways are you planning to pay for college? After you get all your aid, what's left over? What gap remains? And how can we borrow wisely instead of just let's avoid it? How are we going to do this in a smart way that's going to set you up for success in the future? So we created a 4-step model that professionals can use, and the number one and most prominent message I want to give today is normalize the conversation. Normalize that conversation. Instead of just don't take out loans, don't take out loans, don't take out loans, normalize that we're going to have a conversation about this. This is going to be part of what we talk about. And you all know that you're going to have the parents in the room who are like, not my baby. My baby ain't taking out loans. You know you're going to have that. And that's fine. But you're going to have that other mom in the room who knows she doesn't have another option. And she wants the information. Explain the financing gap. So help them understand that even with a Pell Grant, even with the CAP Grant, even with the KTG, even with your keys, even with that great that great $1,000 scholarship, how many of you guys have those students who come to you? They're like so excited about their scholarship, and it's $1,000. You're like, I'm so excited too. And that's amazing, and I love that. Then you're like, how are we going to pay for the rest of it? But with their scholarship, with all of those things, and even with their federal loans, they still may have a gap. I think that's one of the biggest misconceptions when I talk to parents is how much college really costs. Prioritize that federal borrowing. Make sure they always take out those federal student loans first, not the parent loans. That federal student loan needs to come in first. And then plan repayment awareness early. I distinctly remember I was a senior at Transy, and I had to schedule with my financial aid counselor an exit interview to talk about my student loans. I'm just going to say it because we're all adults in the room. I was hungover, possibly still a little bit drunk when I went to my interview. Couldn't tell you anything about what she said. Don't know what we were even talking about. Don't know why I was there. And thank God I didn't, Transy hired me. Crazy. But they hired me, and thank God someone was like, hey, have you consolidated your loans? Because, back then it was like a one-and-done consolidation. That's how old I am. And I was like, I don't know what that means. Let's do that. And they were like, they didn't talk to you about this in your exit counseling? I don't know. But plan that early. That should not be the first time someone is talking about repayment. Is second semester senior year when you're hungover? That's rude. There should have been far more conversations about that as we were going along. And if you're a college in this room, please call Kia. Because I say all the time, I'm like, we will come and talk to your students. Just because they're in college doesn't mean you don't need Kia outreach counselors. We want to talk to your students right now about repayment, about their student loans, about what happens if they need to borrow next year, if they already borrowed from Sally Mae, but maybe they don't want to keep borrowing from Sally Mae. I just need to tell y'all, I do love Sally. I mean, I don't love the product, but I do love the people who work there. I have a very, very good friend who works there. We're like this. I don't mean to hate on them, but they're a for-profit lender, so I'm going to. But let us talk to them now. Like, I know you're busy. We are too, but this is what we do. So let us come talk to your students. We want to talk to your students now while they're still in college about repayment. And then what can we in this room do? We can start the loan conversations earlier. And this says in the senior year, I don't even know, maybe even before that. We need to start the conversations earlier. We need to include borrowing education in our financial aid nights. Sometimes people will say, like, please don't mention loans. Like, I would go into a school and they'd say, you're not going to talk about loans tonight, right? The counselor would say this, you're not going to talk about loans tonight, right? And I did. I did talk about loans. And I did say, because this was kind of like my tagline, is I would say, like, we are not going to take out loans to go to college. We're not going to do it, right? Okay, but when you do, call me so that I can tell you which loans to take out. That's what I would tell my families. They would all giggle. But it was true, and they did. Like, I had that relationship with them, and they would say, hey, I feel like I remember you saying call you when I needed to take out loans. And I'd be like, great. Let's meet at the Starbucks. I'm going to get the applications going for you. Because I didn't want them borrowing from somewhere else that was going to just be, an astronomical interest rate and terrible terms and all the things. Discuss repayment expectations with students. Make sure they know. And if you're sitting here and you're listening to this and you're like, I do not feel equipped to talk about this. I don't know enough about student loans. Call us. This is what we do. Outreach includes everything. Aid, scholarships, FAFSA, loans, repayment, getting a job. Once upon a time, I filled out a form to help a girl get insurance. That wasn't my job. But she needed me, and I was sitting there, and why not? So we do offer all kinds of different assistance. And so to answer your question, is loan a four-letter word? I would say loan is not a four-letter word, but silence is. We cannot stay silent and put our students and families at risk for borrowing irresponsibly and compromising their future because they don't know any better, because they don't know who to talk to, and they think they have failed because the only thing you ever said to them was don't take out a student loan. Kia's here to help. This is the QR code that goes to our team. So if you do not know the outreach counselor who serves your region, please go to this website and find the person who serves your region and contact them. If you want to hear from us on a larger scale, maybe you want us to come talk to your financial aid office, maybe you want us to talk to your staff, whatever you want, Kia pretty much will do it. We tailor requests all the time. Someone will call and say, we want a soft skills presentation, and we're like, we don't offer that, but we will. We'll figure it out between now and then. What questions do you guys have? Questions, comments, feedback, sir? I can, yeah. And I want to preface anything I say with it has not been signed into law yet, okay? And so that is, I have a few panickers on my staff, and they will hear these things, and then they're like calling me like, well, I've got to send an email and tell my counselors that Keys money is going away. And I'm like, whoa. Legislation is just it's a process. It's a whole process. So nothing has been signed into law. When the House bill came out with the budget, they did not fully fund Keys money and dual credit scholarship, which are both KIA administered programs. So we get, and you hear this like, oh, Keys money funded by the lottery proceeds. It is a little bit true, but before there's language in the legislation that before they give any money to us, there's like 8 other programs that get money first. So we don't always get a nice chunk out of the lottery proceeds. And so we get an appropriation. Our Keys money requests that would fulfill everyone's keys that they've earned until next budget cycle did not get funded. It is about $12 million less than what we need to fund to just give the kids who have earned the money they've earned. When the Senate bill came out, we really thought that they would fix that, and they did not. So now the Senate bill has come out. Keys and dual credit are still significantly underfunded. So what happens, I'm trying to explain to my staff, what happens is once the bill is signed into law, so the budget bill will go through all the processes, it will be signed into law. If it remains the way it is right now, which we don't want, so call your legislators, email them, storm the gates. These kids have earned this money. They deserve to get the money they have earned. And that is what the underfunding is looking like, is that we're even going to have to cut what has already been earned. So when it is signed into law, then there's a little bit of a time period that we have to kind of put our heads together as an agency and say, this is what we've got, this is what we need, how are we going to fix, how are we going to change things so that we can award with the money that we have. And we don't even talk about, because everyone's like, well, what are you going to do? What are you going to do? We don't even talk about that till it's signed into law, because it may change and we may be saved by the bell. But contact your legislators. Tell them you have a junior in high school. Tell them that your junior should get the money he or she was promised and has rightfully earned, and that they won't if they don't fund the Keys program. Jenny, did you have something? No, ma'am. They fully funded that. Yeah, it was not fully funded in the House bill, and then they went back and fixed it, and they said, oh, Kia, we fixed everything you asked for. And we were like, no, different programs. So CAP and KTG will be okay. We don't know. We did ask for growth funding for CAP and KTG because of with the Pell eligibility expansion. They did not. So far, they have not given us our growth request. So that does mean, it's not going to be like it was years ago. We're going to run out of CAP 6 weeks after it opened. But it does mean that students who are filing the day before they start college may not get a CAP grant if they're eligible. That's a good question. I'm going to look to one of my colleagues to see if she knows any way to answer that. I feel like where we see that for the most part is on the chamber levels. So like your chambers of commerce, those businesses would be going to them and saying, we want more people in this field. We, years ago, we did, Governor Beshear started the Work Ready Scholarship. And so that goes to those top 5 critical need areas. And that is a result of things like that, of saying, like, we need more people. We've got these great jobs where they're going to make money, but we don't have a skilled staff coming out of college to do this. So we started putting money into that. But that's a good thought. And that is something that, I do think we'll see more of, especially as work-based learning becomes so popular that, we want to, I bet there will be more of that we see in the future. currently I don't know, other than in the chambers of commerce. Ma'am. Sure. Mm-hmm. Mm-hmm. Fantastic. Thank you. We are considered a private lender. We're just state supported. Sure. Mm-hmm. 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 Right. Right. Mm-hmm. Yep. Then they get the money. Yeah. Mm-hmm. Right. Sure. If I would say most parents are familiar with their borrowing ability, and so in full disclosure, you do have to have a median credit score, I would say, to borrow and to co-sign on a parent or on a Kia Advantage loan. And so if a parent knows, I'm sitting in not a good spot, I'm going to get denied, I would always send them to the Parent Plus website, say apply, go ahead and get denied, and it'll give your student more money. So yeah, I do. That was always a recommendation to me. Now, I would encourage them to look up their credit score using a free model, a free credit report, because they may be pleasantly surprised. Some parents would do it sitting right there with me, and they would be pleasantly surprised that they had some borrowing ability. Your first question, I'm old. Oh, okay, so I wanted to kind of open it up to the financial aid people in the room. Anyone financial aid in the room? No, they're busy. So there's something, and this is going to be so vague, there's something where now we're maybe going back to preferred lender lists. So there's some legislation in the works, because I just saw, I'm not on the financial aid office side, so I don't always go to like the webinars that really are more about the functionality of dispersing aid. But I have seen a lot of webinars come through that are about how to manage your preferred lenders list. And in the past, that was a no-no. So it may be coming down the pike that you can do that. And just as my one shameless plug for the Advantage loan, we do have a brand new medical student loan and graduate loan. So as the Graduate Plus loan goes away, Kia has a product that we've put in place. There is one loan available to Kentucky students, and you have to be going to a certain private Bible college to get it. That is the only loan in the state of Kentucky that has better interest rates and terms than the Advantage loan. So there's my one plug. Was there another question in the Jenny? No. There's another question? Tell us. Mm-hmm. Yep. Absolutely. And that's something, that I know my staff tells me a lot. Like you probably know him, Stephen Held. He jokes. He's like, I'm just here to crush hopes and dreams. Because he's like, I all the time will look at a transcript and a kid tells me where he wants to go, to college and what he wants to study. And I'm like, we got to have a serious talk. And so, that it's a hard conversation, but think about how you may change that person's life by having that hard conversation with them. And so absolutely their academic history and where the reality check of, what's possible for you and not just plausible. Mm-hmm. Yes. Mm-hmm. Fantastic. Love that. Other comments, questions, discussion topics? All right, we survived. So let me ask you, is loan a 4-letter word? Probably still going to say yes. No. Very good. Very good. All right, thanks, guys. Enjoy the conference. I'll see you at the reception.